Welcome back to the Malaysian Money Matters show. It's the 21st of March, 2025. Today, we're diving into a concise update on the Malaysian financial landscape, followed by a quick look at international and political developments impacting our economy.
Sounds good.
Let's jump straight into it with some Malaysian company news.
All right, so kicking things off with Axiata Group. You might see some reports about potential short-term dips in their earnings. This is largely tied to their Indonesian unit, PTXL Axiata, merging with Smartfren Telecom.
Oh, okay.
Think of it like this. When they combine these two entities, Axiata won't directly report all of XL Axiata's profits anymore, hence the deconsolidation.
Right.
Plus, bringing two big companies together always comes with some initial costs.
So a bit of a growing pain then.
Yeah, exactly. But the general feeling is that after about 2 years, we could see some significant benefits. They're talking about potential pre-tax savings of up to 400 million US dollars every year from things like streamlining their operations and reaching a wider customer base. Most analysts have a positive view of Axiata's stock in the medium term, suggesting it could be a good bet down the line.
Interesting. Now, Petronas Gas, or PED the Energy Commission has approved lower tariffs for them. What does that mean for the company?
Essentially, PET Gas will be charging less for the use of their gas pipelines and their facilities that turn liquefied natural gas back into gas. That's called regasification.
Okay.
This affects their services to various customers, including the high-pressure gas supply to Singapore. Lower tariffs generally mean they'll be bringing in less revenue from these activities. It's worth noting that these tariffs are reviewed annually, so this isn't necessarily a permanent situation.
Okay, makes sense. What about Hexstar Global? They've got a new deal in the lubricant market.
Yes. Their subsidiary, Hexstar Oil Tech, is now the exclusive distributor for Petronas premium lubricants in Malaysia. This is a 3-year agreement. What's interesting here is that Hexstar anticipates the lubricant oil market in Malaysia will grow this year, driven by new technologies in vehicles and changing consumer preferences. This exclusive deal could give them a significant advantage in tapping into that growth.
Let's move on to Pharmaniaga. They've had their shareholders approve a big cash call. What's the story there?
Pharmaniaga has been working on a plan to improve their financial health, and this cash call is a key part of that.
Okay.
It involves a few things. Reducing their existing capital, offering current shareholders the chance to buy new shares, that's the rights issue, and also selling shares to a select group of investors. Private placement, their major shareholders are backing this, which is a good sign. The money they raise will go towards paying off debts and expanding their business. Like building new warehouses and developing new medicines, they're aiming to get themselves out of their current PN17 status, which indicates financial distress.
Right. A significant move for them. Now, Genting Malaysia seems to be facing some skepticism from analysts.
That's true. Phillip Capital Research suggests that Genting Malaysia's earnings prospects are currently weak. They're pointing to factors like pressure on their profit margins, losses from their investments in other companies, and increasing costs for things like depreciation. They've even lowered their earnings forecasts for the next few years.
Wow.
The one thing that could really change the game for them, according to this research, is if they manage to secure a casino license in New York City. Otherwise, they might remain what's called a value trap, meaning the stock price might not reflect its underlying value because of the weak earnings outlook. However, their dividend payments could offer some support to the share price.
A bit of a wait-and-see situation then. What about Top Glove? They've had some positive news.
Yes, they've reported a profit for the second quarter in a row, and their revenue has seen a significant increase. This seems to be partly due to tariffs that the U.S. has imposed on gloves coming from China, which has shifted some demand towards other manufacturers like Top Glove. They're also seeing general improvements in the market. While they're optimistic, they're still mindful of competition in markets outside of the U.S.
Good to hear some positive news in that sector. Selcan, the water treatment company, has secured a new contract.
That's right. They've won a 167 million ringgit contract to build a water treatment plant and a pipeline in Malacca. This is their 4th contract win this year, which suggests a strong pipeline of work. And it's expected to have a positive impact on their earnings in the future, reflecting ongoing investment in essential infrastructure.
And Scanwolf Corp has also announced a contract win.
Their construction-focused subsidiary Scanwolf Builder has secured a 42 million ringgit contract for the groundwork on a commercial development in Kuala Lumpur. This is another piece of positive news that should contribute to their financial performance going forward, indicating continued activity in the property development sector.
That's some news with a bit more scrutiny around it. Sapura Energy.
Yes, the Malaysian Anti-Corruption Commission, or MACC, recently visited their headquarters. As part of an ongoing investigation into alleged bribery and misuse of funds, Sapura Energy has stated that they are cooperating fully with the authorities and that their day-to-day operations are not affected. This is an ongoing situation, so we'll be keeping an eye on any developments.
Moving to a collaboration, Maybank and TikTok Shop Malaysia.
They've signed an agreement to launch a program aimed at helping small and medium-sized enterprises, or SMEs, in the ASEAN region to improve their digital skills and adopt e-commerce. They're starting in Malaysia with a particular focus on supporting women entrepreneurs, which aligns with Maybank's Her Power initiative. This could be a significant boost for SMEs looking to expand their reach online.
Tech giant Microsoft also has some interesting projections for Malaysia.
A recent study suggests that Microsoft and its partner ecosystem could generate nearly $11 billion in new revenue for Malaysia by 2028. A key driver of this growth is their upcoming hyperscale cloud region in Malaysia, which is expected to be live by the second quarter of next year. This infrastructure is anticipated to create new jobs and significantly contribute to the growth of Malaysia's artificial intelligence sector by providing local access to advanced cloud computing resources.
Finally, let's touch on some news from the Securities Commission, or SC. They have a couple of key updates.
Firstly, the SC is planning to introduce a new way of charging fees for capital market intermediaries, like brokers and investment banks. By 2026, instead of fixed fees, they're proposing a variable structure that would adjust based on market conditions and the volume of activity. The aim is to increase the SC's revenue to cover its operating costs, and they plan to consult with industry players to ensure it's a fair system.
And they're also looking at making investing in bonds more accessible.
Yes, the SC is working with Khazanah Nasional to introduce the tokenization of bonds and sukuk, that's Islamic bonds,
Right.
in 2025. Think of tokenization like breaking down a large asset into smaller digital units. This would allow smaller investors to buy fractions of bonds, potentially lowering the barrier to entry and increasing participation in the capital market.
The SC also reported on the overall performance of Malaysia's capital market last year.
They highlighted that Malaysia's capital market did better than its regional peers in 2024. The total amount of money raised through IPOs and bond issuances increased significantly, and the FBM KLCI, our main stock market index, showed strong growth. Interestingly, while foreign investors sold off some of their Malaysian equities, this was offset by strong buying from local institutional investors.
We also had Prime Minister Anwar Ibrahim addressing government-linked investment companies.
He urged these GLICs to invest a substantial amount, around 120 billion ringgit, domestically over the next 5 years to stimulate economic growth. The focus is on high-growth, high-value sectors. He also emphasized the need for these companies to be more efficient, calling for an end to supporting unprofitable ventures. There's a clear push for greater accountability and a focus on contributing to Bumiputra economic empowerment and supporting local businesses through procurement and development programs.
And a final piece of local economic news.
Yeah.
A shift in our top export market.
That's right. Minister Zafrul Abdulaziz announced that the United States has now become Malaysia's largest export market, surpassing China. This is a significant development, and he encouraged Malaysian companies to consider investing in the U.S., with the government offering support for such expansions.
He also mentioned progress on a unified EV policy within ASEAN.
Yes, ASEAN is working towards a standard policy for electric vehicles, with details on things like battery standardization and charging infrastructure expected to be discussed at the upcoming ASEAN summit. This could have major implications for the future of the automotive industry in the region.
Okay, let's now turn our attention to international news and see what's happening globally. That could have implications for Malaysia's economy.
Starting in Indonesia, their currency, the rupiah, and their stock market both saw gains after Bank Indonesia, their central bank, decided to keep interest rates unchanged as widely expected.
What was the reasoning behind their decision?
They cited ongoing uncertainties in the global economy as the main reason to be cautious. Even though they acknowledged that there might be room to lower rates at some point in the future, they noted that while the underlying factors supporting the rupiah are positive, it's currently facing pressure due to these global headwinds.
Meanwhile, in the United States, the Federal Reserve also held interest rates steady, but indicated that they might cut rates twice later this year. What did Fed Chair Jerome Powell have to say?
Powell acknowledged that there's still a lot of uncertainty about the economic outlook, particularly regarding whether U.S. tariffs might lead to higher inflation. However, his view seems to be that any such inflation would likely be temporary. The fact that they're still signaling potential rate cuts down the line helped to calm fears of a prolonged period of high interest rates. which had a positive effect on many Asian markets.
Across the Atlantic, the Bank of England also decided to keep interest rates where they are. But it sounds like there's a growing sense of caution there as well.
Yes, it seems more policymakers on the Bank of England's committee are leaning towards a more cautious stance, given the turbulence in the global economy. While they still suggest that a gradual easing of interest rates might be appropriate, the minutes from their meeting didn't commit to any specific timeline, emphasizing the ongoing economic uncertainty and rising tensions in global trade.
What about China? How are they managing their monetary policy?
Chinese banks have kept their benchmark lending rates unchanged for the fifth consecutive month. This comes at a time when demand for borrowing is weak and price growth in their economy is subdued. However, there are still expectations that the government might introduce further measures to stimulate the economy, both through monetary policy, like potentially lowering their 5-year loan prime rate to support the housing market, and through fiscal spending, especially to counter any negative effects from higher U.S. tariffs.
We've seen some significant movement in commodity prices, with copper surging past the 10,000 US dollars per ton mark. What's driving that?
The primary driver seems to be concerns about disruptions to the global supply of copper due to President Trump's threats of new tariffs. The anticipation of these tariffs has led to increased shipments of copper to the U.S. as companies try to get ahead of them, which in turn has reduced available supply in other parts of the world, pushing prices higher.
The OECD recently released a report highlighting the massive amount of global debt.
Yes, their figures show that outstanding government and corporate bonds exceeded 100 trillion US dollars in 2024, with interest rates having risen. This level of debt poses increasing challenges for borrowers in terms of repayment costs. The OECD stresses the importance of ensuring that this debt is used for productive investments that can generate future growth. They also warn that geopolitical tensions and uncertainties around trade could disrupt the flow of international investments.
Gold has also hit a new record high. What's behind that surge?
Several factors are likely contributing. The fact that the U.S. Federal Reserve is keeping rates steady for now, but projecting potentially higher inflation creates uncertainty, which often makes gold seen as a safe haven asset more attractive. Additionally, expectations that monetary policy might ease later down the line also tend to support gold prices.
Interestingly, Southeast Asian markets, which were previously seen as relatively safe during global trade tensions, have experienced a significant sell-off recently. What's changed?
It appears that the broader impact of Trump's tariff policies is now being felt more acutely in the region, leading to concerns about trade and economic growth. Additionally, specific local economic and political challenges in countries like Indonesia and Malaysia seem to be contributing to negative investor sentiment, resulting in global funds pulling money out of the region.
Meanwhile, U.S. stock markets also saw a downturn after an initial positive reaction to the Federal Reserve statements. What caused that shift?
It seems that concerns about the potential negative consequences of global trade war resurfaced. Even though the Fed's commentary on potential rate cuts was initially welcomed, their projections of slightly weaker economic growth and higher inflation for the year ahead seem to have dampened market enthusiasm.
Finally, swap markets in Asia are indicating increased expectations for interest rate cuts. In several countries, including India, Malaysia, and Thailand, what's driving this?
The weakening of the U.S. dollar and increasing signs of easing inflationary pressures across the region seem to be the main factors. A weaker dollar gives central banks more flexibility to consider supporting economic growth through rate cuts, without as much pressure to maintain their currency's value. In Malaysia's case, the swap market is now suggesting a high probability of an interest rate cut within the next year.
So what does this all mean for you? We've seen a mix of news, both here in Malaysia and globally. Some of our companies might face short-term challenges, while others are well-positioned to take advantage of new opportunities and the evolving global trade landscape. The U.S. becoming our top export market is certainly a development worth keeping a close eye on.
And the ongoing uncertainty surrounding U.S. tariffs continues to be a significant factor, influencing central bank decisions and market sentiment, both internationally and here at home.
It will be interesting to see how the ASEAN standard EV policy takes shape, as that could have long-term implications for the automotive sector and sustainability efforts across the region.
And the innovation we're seeing in our capital markets, with the planned tokenization of bonds and sukuk, has the potential to open up new investment avenues for a broader range of Malaysians.
This deep dive has provided a snapshot of some of the key financial and economic movements impacting Malaysia. We encourage you to explore the areas that are most relevant to you in more detail, and consider how these trends might influence your financial decisions. If you found this update informative, be sure to subscribe to the Malaysia Money Matters podcast for more concise and insightful analyses. We're always interested in hearing what aspects of the Malaysian economy you'd like us to delve into next, so please let us know. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.